Leo. Welcome from London. Alistair, where are you? Epsom, very nice. Very nice. Well, I'm tuning in from God's own country up in Yorkshire.
Wolves. I'm Liverpool based as well. I say as well. I'm Liverpool based.
I love Putney. Very jealous, Leo. By the river, hopefully. Cool. Right, should we get started, Joe?
Yeah, sounds good. So welcome to everyone that's tuned in today. It's great to see the turnout that we've got. My name's Joe. I'm the Business Development Manager here at Swoop. So just some housekeeping before we start. If you've got any questions or comments, just drop them into the chat box or the Q&A. I think either Sam or Nana will be keeping an eye on the Yorkshire as well. Sam and I will be keeping an eye on the questions and we can go through any at the end. And same if you've got any tech problems, just pop them in the chat box and Nana, who is sitting in, can jump in and help out. So that's it with the kind of housekeeping done for today. So today's webinar topic is how to stay on top of the ever-changing funding landscape and how we can help at Swoop to cover that. So to help me with this subject, I've got Sam here, obviously, and then we're going to have one of our funding managers, Tom, join a little bit later on. And then towards the back end of the webinar, we're going to have one of our advisors who's using the platform, jump on, have a little bit of a Q&A with her, tell her a little bit about our story. That'll be Georgie, but that'll be a little bit later on in the call. So I suppose to start off with, yeah, as I mentioned, I'm Joe, I'm business development, so I'll be working with any of you guys as accountants looking to become advisors. I've got a background in sales and chatting with people for a living, so that's where I've come from. And then obviously there's Sam here as well, who is the head of the advisory service, who once you join on with the platform, we'll be working with him directly. So I'll let him say his hellos as well.
Thank you, Joe. Yeah, so if you haven't come across me before, I'm Sam. I'm a chartered accountant myself, so can relate to a lot of what you guys are going through, have been through over the last couple of years. I suppose I'm just fortunate enough not to have to prepare any accounts and tax returns anymore, and I just get to work with you instead. So, yeah. So when I first joined Swoop, I headed up the success side, and then have more recently taken over the running of the whole channel. But if you guys are to come on board, or if you're already on board with, then you'll be familiar with me and working with me. And basically, our role is to help you build funding as a key part of your service. And as a key part of the advisory services you might be offering on top of the general compliance stuff, and basically help get your clients get access to funding. And we'll talk about the various different types of funding in a minute, and the sort of things we're seeing in the market at the moment. Obviously, we're potentially heading into a recession, so we're often asked about what that might mean from the funding landscape. So yeah, please ask your questions, challenge us, tell us if you think we're talking any shit. And we'll do best to answer anything that you can do that you want answered. But yeah, looking forward to getting to know some of you.
Yeah, I think as a starting point, we'll assume that everybody knows nothing about Swoop. So to kind of give an overview of the platform itself, as Sam mentioned, we help in getting the funding for your clients through kind of 3 or 4 main different channels. Tom will be joining a little later to talk through the debt side of things in a little bit more detail. Debt is one of the aspects, so we cover anything from startup loans up to commercial mortgages, £500 up to 50 million, full range there. We have a full team that work on the equity side of business as well, for people that are looking for investment, whether it be through angel investors, family funding, those kind of avenues as well. I said angel investment already. VC, that was the other one that I was looking for. So we have a panel from 250 to about 300 investors, I think we're up to now. That we work with. The team there will work directly with the client to make sure that they're investor ready, and then pop them in front of the right potential investors for the business, really, rather than just putting it out to irrelevant investment opportunities. And then on the other side of things, we've got the grants. So we have Grant Finder tool. Sorry, I'm just reading that. I'll not read the comments. Sorry, I just seen you wanted there, Leo. Say again?
Do you want me to take on Leo's question?
Yeah, go on then.
Yeah, so Leo, just on that, so Funding Circle are actually a lender, so they do have their own portal, but within their own portal, you're only taking out Funding Circle products. So Funding Circle are one of the lenders on our panel of lenders. So yeah, we are a funding platform, if you like, but we take a much more holistic view of funding. So debt isn't always the right option for a business. We think it's important to look at what grants might be available for a business, or potentially if they're looking to take on equity investment, then we can support them there. Or it might be savings, bank switching, FX hedging. We can basically do the whole thing. So it's about taking a holistic approach and view of business, and then going out to the market and collecting all the best options for the business based on their figures, financials, pitch decks, whatever it might be.
I hope that answers your question, Leah. I mean, we were going to do Q&As at the end, but sorry, I got a little bit distracted there and we jumped straight in for that one. So that's the platform approach, and we have the grant finder tool as well. So if anybody's tried to find a grant for any of their clients, they know how difficult it can be. 101 clicks later, you're still nowhere close to finding what you're actually looking for. So we have a grant finder tool that pairs you and puts you, brings a condensed list of grants that are applicable to be applied for, basically. The other aspects of Swoop are kind of the main offering that we're looking to encourage is the advisory kind of education side of things. So we don't necessarily need to all be experts in all things funding. That's why we have the funding managers in the background, but we have an education platform that facilitates you getting to the point where you can be comfortable having the conversations about the different aspects that are around funding. So whether that be a bit more information around commercial mortgages, or some more information around the equity side of things, just to start having those initial conversations as well. And then part of the offering that comes with it is that you get to regularly chat and check in with Sam. As he mentioned before, he is a chartered accountant. I'll let him kind of say his piece, but there's the regular check-ins that come with him, strategic reviews, all those sorts of things to make sure that you're heading in the right trajectory, and really promoting and offering funding as a service to your clients.
Yeah, I think part of the reason we've grown this channel and are so committed to making this work with accountants is, in the past, accountants' relationship with funding was always quite reactive. So you'd wait for a client to come to you with a particular funding need or funding request, and then you'd probably tell them to go and speak to their bank, or you might go and and if the bank said no, then the business would end up not really having anywhere else to go. They might then turn to Google, and then you would end up probably your client would go to whoever's paid the most in advertising that particular day. And what it meant was, if the business had been declined by their bank, they'd go away probably thinking they were not a great business, which is not very nice for a business owner to hear, or they would end up not getting what is the best option for their business, by looking at the whole of the market. So that's where we've sort of come in, is to help you guys be that, cement yourselves as that trusted advisor and that person that can connect your clients to any particular resource. So that's where we come in, is to help you guys get the whole market access, and really quite quickly and easily build funding advisory as a service within your firm. We can just become that extension of your team, and we're always happy to pick up the phone and speak to your clients directly, or bring you guys along with us on the journey. And yeah, it's something that I think is becoming more and more important as we go along, for accountants to be able to offer this sort of service. I'm still yet to speak to a business owner recently, I don't know about you, Joe, who isn't interested in funding in some way, shape or form, and to understand what sort of funding might be applicable for them, where it might fit into their life cycle, or just in terms of being nosy and understanding what the market looks like and what's out there. So I think it's hugely important, and there's so many knock-on benefits of it as well. Obviously, stickier relationship with your clients, potentially additional services being sold in terms of management accounts, management information, cash flow forecasting, all of these other additional services that you might be able to then go and sell and increase the amount that you're doing with your clients. So there's so many benefits of speaking about funding, of being able to be that sort of knowledge resource for your clients.
I think, kind of coming back to what you said there about people not necessarily or everybody's happy to go down the funding route. The only time that you get really objection to it is when people don't think that they're eligible for funding or don't know that they're eligible for funding, which is where having those conversations becomes very useful, and being able to open up the conversation and the opportunities that they might not know they ever actually had, particularly whether it be down the grant route, for example, not knowing that you're eligible for a grant that's in your area, or not knowing that the options for asset finance are actually available to you. And those sorts of things, and being able to have those sorts of conversations is so powerful in being able to bring it up with people.
Yeah, I mean, you know, it's difficult times at the moment, right? We're probably going to end up in a recession. So businesses are probably going to fall into three different areas. Some will probably, the best thing for them to do, unfortunately, would be to pack in their businesses. We're never going to push any sort of funding at those, because the right thing to do probably is to call it a day. Then you've got those businesses that will just need some sort of working capital support to help them to survive the next few months. You know, it might be to pay their salaries, or to buy a new piece of equipment, or whatever it might be. And then on the more positive note, you've got those that see recession, or see the recession as a huge opportunity for them to steal a march on their competitors who might be struggling, or to enter new markets and to bring out new products. So that sort of funding is the really exciting part of the funding, and that's funding for growth. So, you know, we don't expect to see a slowdown in funding over the next few months. There's definitely opportunities for your clients of all different shapes and sizes to get access to some sort of funding, whether that be debt, grants, or equity.
And on that as well, we're mentioning how kind of the recession that's coming and the struggles that people are going through, savings are always an option that people don't necessarily look at as well. And it's something that we can take, as Sam mentioned earlier, with the holistic approach of looking at the bigger picture. Sometimes businesses aren't eligible for funding, as I mentioned, and savings can clinch that deal almost sometimes, and bring you back into the green to make it eligible. And especially at this moment when we're going through all these ridiculous energy bill pricing and stuff like that, finding those savings that you might not necessarily know to look for, also facilitates quite a lot.
We've had another question from Leo. I can see Nana in the background typing an answer, but it might just be easier if I take this one on as well. So, what is the advantage you have to make a difference to SMEs? Flexible, different type of lenders, including equity. Do you offer secured and unsecured type of funding? Can you offer cash flow based funding? Fast closing. What about costs and charges? A lot of questions there in one, Leo. The answer to pretty much all of it is yes. So any type of funding, any type of debt product, and most you're talking about debt there, or loans there. So we have a very expert group of ex-bankers, brokers, etc. in the commercial mortgage and property side, so much more focused on secured lending, and same with asset finance, which is also secured lending. And then anything on the unsecured side, again, we've got a pretty great team of experts behind the scenes, behind the technology, who you know, if there's a deal to be done, we'll find an appropriate lender for the business. Cash flow based funding, absolutely. Revenue based funding, which again we can touch on, or you can have some education on that if you're to join up. Oh, the question's gone. Hang on, it's unanswered. And then in terms of costs and charges, so it really depends on the lender, and it depends on the business. So it depends on levels of affordability. And Tom, who is more of a funding expert than me, will talk about this in a bit. But obviously, the sooner you need the funding, if the funding is urgent, there's always going to be a cost to speed. So the quicker you need the funding, the more likely the cost is going to be higher. If you have something to secure against, then the costs are likely to be lower. So it really just depends on the product. It depends on where the business is at, and it depends on how quickly you need the funding as to where costs and charges go. Tom will do a bit of a market update when we come to him in terms of what are the new offerings out there. So you might have heard of the new recovery loan scheme that's going to be, well, technically it started, although the lenders are still waiting to be approved. So we're not actually seeing deal flow on that side yet, but Tom will run through the ranges of interest rates that are likely to occur with those. So yeah, it really just depends, Leo. It depends, and there can be a vast range depending on affordability and funding timeframe too.
Yeah, hi Tom, welcome to the call. You kind of joined at the ideal time as well, because the question for you has just come in. I think it's disappeared again now, but we were just about to start touching on the debt side of Swoop and what we can offer. So I suppose now's a perfect time for a bit of an introduction from you and covering all the options that we've got.
Perfect. Thank you, Joe, and hi Sam as well. So I'm a funding manager at Swoop. So I work specifically within the unsecured and asset finance team. I suppose the products that we can support with range from anywhere from business loans to revolving credit facilities, asset finance, invoice finance, merchant cash advances, e-commerce products. There's a really vast range within the debt finance space. In terms of products that we can actually support with. Alongside that, and I'm not sure if you guys have touched on before, we've obviously got a commercial mortgage offering as well, which would sit in a separate team to myself, where anything that is related to a property in regards to maybe refinance or purchase or looking for a bridge, anything along those lines will kind of sit within that team. So I suppose a key for us is always understanding the client. If there is an initial interest in funding, if there is a need for funding, whether that be a want to grow the business, whether there is a need to purchase stock, or whether they want to purchase a vehicle, there are a vast range of reasons behind funding. I suppose us as funding managers is really to understand those needs, and obviously be able to apply the most A, cost effective, B, applicable, and just the best product out there in the market. And I suppose we can generally gauge that from an initial conversation. Obviously we are moving into potentially difficult times, so there may be some more kind of urgent needs of funding, but there is support out there for businesses who are potentially facing increased costs this winter. And obviously heading towards this kind of time of uncertainty. But yeah, I suppose in terms of different, do you want me to go into different products, Joe, or?
We can do, yeah. I mean, you touched on it there, but really it's finding the best solution for the client, isn't it? And finding the best solution for their needs at that current moment in time. So I suppose we can go briefly into the different products. Yeah, that'd be ideal.
Yeah, perfect. And I suppose just to start, I mean, Sam touched on it earlier with this new RLS that we're seeing. So potentially people have heard of the previous recovery loan scheme, which was a successor to Sybil's and the bounce back, which were very heavily utilised through that initial kind of point of COVID, where there was lockdowns, businesses were unable to trade and did need that support. So I think April 21, we had this successor, which was the recovery loan scheme. It took a few months for that to really get going, and the second iteration of the scheme is being run in a similar way, where the British Business Bank will accredit different funders to provide those facilities. So it's a key thing to realise that it isn't the British Business Bank who are providing the loans. It is the lenders in which they accredit. So the first time around, we generally saw around a 3 to 4 month lag time in especially the alternative finance space, where we had a full suite of options available to us to actually provide these facilities. And we're probably seeing, and I think Sam touched on there, where this new scheme is being run in the same way, where the British Business Bank is going to accredit different funders to provide these facilities. So far, there is generally just the high street banks. I believe the last time I checked, there was 8 funders who had been accredited between kind of high street banks and regional funds. Generally, their appetite isn't going to be there for the recovery loan scheme. So it is going to be down to the alternative finance space to hopefully support these businesses through this scheme. We are hoping potentially the end of this month, potentially mid-October, for us to at least have a couple of options. We are hearing some funders who are in discussions with the British Business Bank to actually get onto that scheme and provide that facilities. But I suppose at this point, it's very much in its infancy in terms of the scheme. And I suppose where we can support now are down some more of the traditional loan products, rather than directly through that government-backed scheme that we're seeing being run at the moment.
Yeah, it's perfect.
Tom, what's the typical interest rate that we're seeing at the moment then? And I know it depends, but like what we're generally seeing?
Yeah, so I mean, we've definitely seen an increase in the last 3, 4, 5 months than what we saw maybe kind of end of RLS time in April and May, and obviously the first kind of the traditional products coming out post RLS. So at the moment, obviously with base rate increases, which is obviously going to increase the cost of borrowing for lenders because they obviously take their funds from larger funds, and obviously inflation at the moment, everything is getting more expensive. I would say we do still have funders that can look around 7-8%, but that is for those potentially top tier businesses who are going to hit the criteria for some of the more kind of stringent funders in terms of appetite. On average, I would say we could probably look anywhere kind of 10 to 15% at the moment. And just to come back to the RLS, so the RLS will be capped at 14.99 as it is right now. Again, that's a bit of a moot point in terms of that we can't actually make those introductions as of yet. But yeah, around the traditional loan space, we'd probably say 10 to 15%. And we still do have options where we can spread that over to a 5-6 year term, which will allow us to obviously appease cash flow in the short term and not have those chunky repayments. On the flip side as well, and of course we do have that full range of funders, so if potentially there is maybe a riskier lend for a client that doesn't hit the criteria for those 5-6 year terms, we can have a look at maybe shorter term facilities, which may border kind of 15% plus as well. So yeah, we do have the full scope available to us in terms of our lender panel, being able to support these clients.
When's the best time to look for funding?
When you don't need it. It's always about being proactive, and I think a lot of a point which I do speak to my clients a lot about is funders want to lend you money when you don't need the money, which is a crazy roundabout thing of thinking when businesses actually need that support. But when you are trading really well, when you are profitable, when you are seeing kind of new contracts come on, that is the best time to lend because you are more attractive to a funder. At the end of the day, it comes with these facilities. It comes down to perceived risk. If you're trading well, a lender is going to want to lend to you. So I suppose with this, it's always about being proactive in terms of opportunities out there and almost identifying the opportunity prior to having that opportunity presented to yourself. And I suppose from my perspective, I'm always happy to have a chat with any prospective clients who are maybe not even looking for funding, but just want to see what's out there.
It was almost like I teed you up for that, Tom, because that was exactly the answer that I wanted you to give. And that's why at the start of the call, I mentioned that in the past, accountants would have just been very reactive when it comes to funding, i.e. waiting for that specific funding needs. But the whole purpose of working with us and working with us quite closely is that we will help you to build confidence and to spot those opportunities before maybe even your client realizes there's an opportunity. And it's about taking advantage and growing using funding as a vehicle to grow your business a lot more quickly than maybe organic growth can do. So especially for those ambitious clients within your client portfolios, funding has got to be a key part of their growth strategy. And that's where you guys come in, is to help them to build the forecasts and everything else to go around it so that they can take advantage of those opportunities. But yeah, like just to reiterate, the best time to get funding is when you don't need it.
Oh, for sure. And yeah, there are, it just goes back to that point that there are, the better trading you are, the more likely you are to actually secure those funding and hit those kind of credit policies within the partners that we have.
Just to tackle another question, sorry, Jay, another question from Leo. He's been sitting patiently waiting for us to answer. So I wanted to know if there are any closing fees or other fees that apply, no problem if are justifiable. So particularly through the advisor side, unless it's a commercial mortgage opportunity, we just get paid by the lender. So there is no fee for the client, generally speaking. Everything is just paid to us by the lender. So there's no additional cost for closing. That's on the debt side. And then if you guys have introduced the client to us, then there's a commission, a share of that commission that gets paid to you. and that also depends on how closely you work with us. Slightly different on the equity side. So equity side works on a success fee basis. So there's an equity package which basically allows you to get access to all of our various funders and an investor readiness program that takes up to 12 months. Hopefully the introductions happen a lot more quickly than that. And then there's a 5% success fee if the business was to successfully get investment. And then grants, the grants on the innovation type grants, the bigger grants, works on a similar basis. So there's generally a writing fee, and then there's a further success fee that comes after that. And again, the accountants can share in the commission that comes from those fees. But generally speaking, for the majority of the debt type products, so your term loans, your RLSs, etc., there's no client fee charged. And any money that Swoop make comes directly from the lender. And any commission that you guys make from that comes directly from the lender.
Just to jump back on then and come back to Tom, we were having a bit of a catch up yesterday as to the sort of talking points to focus in on, and something that we do get asked a lot is about VAT and corporate tax loans. If you can give some insight into those, just share your knowledge with us.
Yeah, of course. And I think maybe those types of facilities are definitely underutilized in the market, or maybe a lot of clients are unaware that those products are out there. Obviously, VAT and corp tax are either your quarterly or annual liability that has to be paid. And I suppose in comparison to a lot of other obligations for a business, such as maybe your insurance or your rent or whatever it may be, wages and payroll, they are monthly obligations. So I suppose I can definitely see, and we do see it with the clients that we speak to, that maybe there may be a little bit of stress that I've got this quarterly 30k VAT bill next month that I don't really quite have the cash for now. What we can do, and a way to kind of strip it back, is turn that quarterly liability into a monthly liability. So we have some of our partners who can actually support with, they are called VAT loans. They are a 3-month term. They will pay the funds either to the business or to HMRC. So for example, let's say there's a 30k liability for VAT. What we can do is actually spread that into 3. Let's say there's a 3% charge on that. We can put that onto kind of £10,300 payments across that 3-month term. So I suppose the benefits are, again, changing that into a monthly liability. What you are also able to do with, let's say, in that first month, so let's say on day 1 you are expected to pay 10,000 rather than 30,000. That 20k you've then got for an additional couple of months, which you can then invest into your profit making activities. You can go out and use that funds for furthering the business and achieving growth. Similar on the corp tax side as well. We can spread that over 12 monthly repayments rather than that being that one kind of big chunky payment at kind of one point. So yeah, it's definitely becoming a more utilized product. As we are hoping to kind of increase knowledge across the board. But if there are any conversations with clients that you may be having where there's I might struggle to make this payment next month, definitely let's have a chat. It's a really quick product to turn around as well. So for example, we can, from the point of application, we can have funds in account within kind of 2 to 3 days, which is great.
No, that's perfect. And I think Sam's asking a question as well.
Yeah,
a little bit quiet.
Leo's come in with another question. Thanks for being so engaged, Leo. Really interesting questions. So there are many lenders and platforms of funding now in the market. I assume working with you, the advantage is that you provide more flexibility and varied sources of funding, and hopefully have closing. So Tom, do you want to start? You can start with answering that if you like, and then I can fill in.
So let me just read that again. Sorry.
So
yes, definitely.
Basically, what are the advantages of using someone like Swoop?
Just while you're reading, no worries, Alistair. We'll get the recording across to you. I just saw it in the chat box.
Yeah, sorry. So I suppose the advantage of us is that we kind of really multifaceted in the ways in which we can actually support businesses. I suppose If we're looking at each individual kind of siloed point of Swoop, we are, I would say, definitely market leaders in terms of what we do. I suppose, looking from my perspective on the debt finance side, I think where we go above and beyond potentially some of our competitors in the market is that we aren't solely reliant on tech, and we aren't just solely reliant on relationships. We really like to blend the two. We have a really strong tech platform behind us, which we can obviously utilize different relationships with partners. We can present funding matches to different clients. We have instant loan journeys, which we can support with. But to strip that back, sometimes clients are going to need a bit more of a human touch. They want to speak to someone about what their needs are. They really want to dial into what it is that we can do to support. And that's where we obviously have a team of funding managers who can have those conversations with clients. We can really discuss what it is they're after, and we can tailor that to the best product in the market, because some of our partners are maybe a little bit, I won't say behind with the times, but they are maybe a little bit stuck in the ways in terms of that they do take applications and they do work with their clients. So I suppose it's us leveraging that relationship and that experience within the market to find those opportunities for clients and so on and so forth. So that's where I think we add value above our competitors, that we're not solely reliant on tech, we're not solely reliant on the relationships. We like to think that we're best at both, for sure.
Yeah, just to add as well, I mean, because of the volume that we're putting the way of some of these lenders, so Leo, you mentioned Funding Circle earlier, because of the volume, we're able to broker and negotiate a much better deal than had a business gone to Funding Circle, for example, directly. And because ultimately they'll know that we're probably going, because we like to give all of our clients and businesses options. So we're likely to give 2 or 3 options if a business can get 2 or 3 offers. So the lenders are always aware of that, and therefore are likely to squeeze their interest rates as much as possible. So that again just helps us to get the best possible deal out there for your clients. So yeah, just another benefit, I suppose. Just wanted, Joe, sorry if I'm about to interrupt your next question, but just wanted to, and Tom, you can maybe back this up as well, but say how important the role of an advisor, an accountant, whatever it might be, is in the funding application. I think it's something like a business is 4 times more likely to be successful in a funding application if the accountant or advisor is involved in some way, shape or form. And it makes sense, because you guys are ultimately the ones that are going to be putting together the information, are going to be chasing, who are going to be working on both sides. So I think it does make sense, but I think it's just worth knowing. And it shows again the value that you guys can have in funding, even if you are not the expert yourself, even if you're not the one who's hand-holding your client all the way through. If you're involved in the process, the client's much more likely to be successful.
Yeah, Sam, I would completely agree with that. I love all the supervisors that we've got are all fantastic to work with and introduce some really great clients to us. And just to add on to that, I suppose the advantage of having that relationship alongside obviously the either the relationship with the client or kind of the introduction is just having that up-to-date information available to us. Obviously it's a warmer introduction. There is somebody behind the client that we are speaking with, but a key kind of point of the application process and a key kind of aspect for us as funding managers is having up-to-date information and having it quickly, I suppose, and that can obviously increase the chance of us securing funding, but increase the speed of which we are able to get that, because generally a bit of a kind of lag time that we have, hey Georgie, bit of a lag time that we have is potentially gathering that information. So we'll have a little shopping list that we'll generally go out to clients with, and we always find that the accountants are really proactive in getting that information to us, and then that can then increase the speed from the first conversation to submitting that application. On the back end as well, what we do see a lot of is funders come back with questions. It may not be a case of once we've written up the proposal, we put it to a funder, they come back with a yes or a no. Generally, there may be an ask for further information. They may want clarification on a bit of the balance sheet or why the profits drop there, and so on. And having that relationship with the advisor is key, because it is always, we'll get a much more detailed response, and it'll be a lot quicker. Just to come back to those two key points. And with funding, the more that we can tell the lender, the more that we are open with the information that we got, the more likely we are to actually go and get that successful outcome.
Yeah, it's another benefit of having you guys who are so much more experienced and being more than just a tech platform. Because if we were just a tech platform, quite often some of the applications wouldn't get past computer says no. So, you know, if there's a liquidation in the background that a business owner's gone through, or a CCJ or something like that, if you'd just gone with computer says no, the business owner would go away with no further options. And that's the power of having the likes of Tom, who can then take the application through the manual underwriting process and tell the story of the business, explain why there might have been a liquidation in the background or whatever. And that's the power of not just relying upon technology, but having the people, the expertise behind it as well. Just before we bring in Georgie, sort of asked a lot, Joe, about what sort of accounting firms we work with, size of accounting firms, number of clients, blah blah blah. Like what's the sweet spot, or who do we like to work with? And we do work with a huge range. We work with accounting firms and advisors who have 2 or 3 clients, because they might not have the client base ready for funding right there and then, but they know and understand the importance of being able to talk to their clients about funding. And as they grow their business, they want funding advisory to be a key part of their service. So from that point of view, we really support them on the marketing side to help them get the word out about the amazing service they can offer. And we will actively help them target and go out to the various different industries or specialisms that they might have. Flip side, we work with some of the biggest networks in the country. So we've just signed up the number 6 biggest accounting firm in the world, which sounds amazing on paper, and it's a great feather in the cap, but they are really bloody hard to work with because there's no one necessarily there that takes ownership of it. So you might think that, 40,000 clients is a huge opportunity. It is, but it's really difficult to untap that potential, and the accounting firm doesn't necessarily have that pain to progress with something like this that one of the smaller accounting firms might have. So, and I'm not just saying this because Georgie's here, but my type of accounting firm that I prefer to work with the most is the sort of between 100 clients and 500 client type, where you've got the business owner or partner or director, whatever you want to call, who is my first point of contact and is the one that, generally speaking, will be having some of the conversations at least and spotting opportunities and can run with these sorts of things quite quickly. The firm generally is born with tech in mind, so hasn't necessarily had to go through digital transformation over the last sort of 10 years, embracing the cloud, etc., because generally speaking, they're going to be much more slow to work with. Sorry to make a general sweeping generalization, but those more dynamic tech type firms do get this, and they already have the advisory mindset. So from a success point of view, when we're coming in as a software company trying to work and get the best out of them, I'm not having to start right from the beginning, i.e., you should be doing these are the sorts of things you should be talking to your clients about, because they already know they should. It's just about finding the right time and overcoming some of the other challenges, which I'm sure, Georgie, you'll touch on in a second, some of the challenges that you go through. But that might sound counterintuitive, i.e. fewer clients might not sound like such a big opportunity, but it's just so much easier to work with the likes of Georgie, who genuinely care about their clients and added value, and how we can support them next. And those are the absolute dream to work with. So the point of that message is, it doesn't matter if you've got 5 clients or 40,000 clients, we will find a way to work with you and to relate and listen to what your biggest challenges are and what you want to get out of this. It's not a one size fits all type pushing of a service. We generally are working with you to find out what you want to achieve and what you want to do for your clients.
Yeah, it's what you want. As you just said there, it's what you want from your clients as well. And with the smaller firms, you tend to find there's a little bit more, you mentioned it on a previous webinar, actually, in terms of the clients being like the babies. And if there's less clients in that catalogue, let's say, there's a lot more hand-holding, a lot more personable communication between them. Yeah, agreeing with you there.
Perfect time to bring in Georgie, I think.
Exactly, yeah, perfect. It's almost like it was made to happen. Oh, we had a plan. Hi, Georgie, how are you?
Good. Just been in a meeting talking about funding as it happens. So by happy coincidence.
Quite on topic then.
Absolutely.
Excellent. So I suppose to start off with then, if you could just give us a little quick introduction about the practice, kind of some of the industry specialisms that you work with, number of clients, kind of following on from that same sort of point, and then like roughly the size of the firm as well, that'd be perfect.
Yeah, no problem. So I'm Georgie. My business is Starfish Accounting. I co-CEO Starfish Accounting with my business partner, Emma. So we work together and make decisions together. And we're currently a team of 9, desperately seeking a 10th, because we just lost somebody very sadly for family reasons. We've got around about 300 clients. So nice plum in the middle of that 100 to 500 bracket you're talking about, Sam. We niche in women in business, which is an unusual one, but we're all women, and we understand a lot of the challenges that sometimes mothers in particular have with the massive juggle. So that tends to resonate quite nicely with our clients. We do have a few industries that we also niche in, so professional services, as to most people, right? Fashion, which is a challenging one, hospitality, which currently is also proving quite a challenging one. We've got mini niches that we really like with breweries, coffee roasteries, and then IT software, which is my background. Back in the day, I worked for Deloitte out in Silicon Valley, so I love a software business. So
yeah, I remember the first 2 clients you spoke to me about was a brewery and a coffee roaster, I think, and I was like, oh, Georgie, I love working with you already.
Happy to oblige.
almost like you were made to work with Sam. It's just sort of all the things that you were just describing as ideal, like just ticking all the boxes. Exactly. So in terms of funding then, prior to using Swoop, what was kind of your approach to funding? Did you have one? Was it a case of, before you joined, Sam mentioned that a lot of the time it would be a case of referring them to the banks. Was it an advisory service that you offered, and how did you handle it when it came to you?
We certainly didn't offer funding advisory, and if we were aware that a client needed funding, it would be a bit of an angsty moment. Sometimes we'd get asked about it, so we were dealing with things on a more reactive basis, and we'd generally be asked about it if somebody had gone to the bank and the bank had said no. So can you recommend anything else? And so we do have a couple of contacts. Emma's had a contact for many years who's particularly helpful on a sort of more contained part of financing. So we were sometimes able to refer people on. We have a client who specializes in obtaining startup loans. So again, we've sometimes been able to send work on, but it's never felt consistent and it's never felt very coherent. We were really looking for something to fill that gap. We had a couple of clients where we knew it was going to come up, and we wanted to be able to come across as though we actually would be able to help, rather than going, it's not our area, try talking to this guy. And that's when we came across Swoop, and that's been, phenomenally useful for us already.
I think Tom will attain to that as well with the last minute needing of funding. We need it yesterday sort of conversations.
Yeah, always seems to be the way.
Exactly, yeah. We need it yesterday, or we've already got it. What can we do?
Yeah.
To be the 2 options. And I mean, talking kind of roughly about, vaguely about one of the clients that you've been working with since joining it. Obviously recently managed to secure some funding. How did you find the process? Was it as straightforward as we're saying that it is, basically?
In all honesty, we were surprised at how straightforward it was. We were expecting to have to do a bit more work and to make the funding happen. and we know we're getting a payout from that, which is absolutely fantastic, and we're feeling slightly guilty about retaining it. So I think what we're going to do in that particular scenario is give the clients, I know you didn't ask this, give them some credit to use towards more business development work, so we can kind of deepen that relationship, because it doesn't feel, it was so easy, it didn't feel like we earned our money.
No, I mean, that's exactly what Sam was mentioning earlier about kind of drawing the commission and then choosing what you do with it, whether you put it towards additional services or something like that. So it's a perfect example of what happens when you do kind of draw that commission and how easy it can be.
Yeah, so just on that, there's a few different ways, because we get asked this a lot, or people suggest that taking commission is unethical in some way. And I suppose you could see it like that, but my response would be, well, I've got a few responses. So firstly, you're probably not charging a fee for finding funding, i.e. having a meeting with us, having a meeting with them, collecting information. That's all using up your time, and you're probably not charging a fee for it. So all this is doing is enabling you to give that service whilst getting a fee, which is actually should be payable for the work you've done in terms of gathering all the information, etc., doing the meetings. So quite often, I know you said you weren't too involved in this one, but quite often it will just be compensating you for the time and energy you put into this. The other thing is you don't have to accept a commission. So you could use, in terms of putting it into your own bank account, you could use it to offer a discount to your clients for the services they already have with you. Some people use them as advisory tokens. If they're trying to get some of their businesses to take out more advisory services, well, why don't you try it basically for free? And if you feel like you're getting value from it, then ultimately you're going to continue to do it. And then we have some very purpose-led accounting firms that we work with. And actually, there's one in particular who we don't actually have his bank details linked to our account at all. Any commission that he earns goes straight to a company called Ecology, which basically grows and plants trees. So he's made a pledge to plant 1 million trees by 2030. And by helping his businesses get access to funding, we're also helping the environment and everything else. So there's plenty of guilt-free ways of looking at taking commission as well.
Know exactly who that is, by the way.
Yeah, he's a legend.
He is.
Internal accounting legend, planting all the trees. Did you have any further questions for Georgie, Sam? I mean, I kind of asked some very broad ones about your experience and kind of about the practice and stuff. So
yeah, just Georgie, I suppose, how are your clients responding to being asked about funding slightly more proactively? Because I know you are, like you did just now, starting to have those conversations, probably without waiting for it to be brought up. Are you finding clients are responding quite well, and are people, business owners, asking lots of more questions about funding at the moment, given where we are with the economy and everything that's happening?
There's so much uncertainty at the moment, isn't there? It's just we don't know what's going to be coming in 2 weeks' time, let alone next year. We're finding clients are really receptive to it, actually. I'd say almost relieved. And it's asking questions about what their plans are from a funding perspective. It's like it unlocks a different conversation and stuff that they've been worrying about in their own heads, even if it's a positive kind of worry, if they need funding in order to be able to invest in a new whatever it is, and they're not quite sure how to go about it. Or the more negative, we know we've got issues with cash flow, we don't know how bad it is, we don't want to look, we're sticking our heads in the sand and hoping it's all going to go away. It's kind of enabling the client to have a conversation about what's really bothering them, where perhaps they wouldn't have brought it up otherwise. We've not had a great deal of surprise that we're asking. It's like maybe clients wouldn't have asked us about it because it didn't occur to them, but it feels like it sits within our remit. It feels like it's a logical extension to the conversations that we've been having. And yeah, I'd say it's been very positive so far. So it is something that's coming up much more routinely now in conversations.
This is it. The accountant's role or the advisor's role goes way beyond just being an accountant. As you often end up almost being a little bit of a therapist and being that bit. I mean, I imagine you take an awful lot on your shoulders, don't you?
Well, you do, because You get very emotionally invested. I mean, one of the clients that I know you guys are looking to try and help. We've been working with him for several years. He's one of the nicest people in the world, and currently he's in a really difficult set of circumstances. And it's like, we now know that there is funding that he can unlock. And he's gone from basically going cap in hand to the shareholders, having all of the shareholders turn around and say, we are not investing any more money because we don't think it's going to succeed, to now having an option so that he can then put better periods when it's not a heat wave and it's not summer holidays, to see if he can prove to himself whether or not it's going to work, and then to look at alternatives for an exit strategy if he needs to.
Yeah.
Sort of in there, basically crumple. It's the end of that conversation with the shareholders. I was on the meeting and I said to the client, you know, let's just stay on the call at the end. And he just looked absolutely defeated. Yeah. And now again, it just makes such a difference.
Yeah, it does. And you know, kudos to you for taking the time to have those conversations and to listen well as well, because it's not just about giving advice all the time, is it? It's sometimes just listening.
No, absolutely. It is. Like you say, you're basically functioning as a bit of a counsellor. I mean, it's not cool to go into it, but you tend to be the first person who hears when there's a divorce in the pipeline, or when somebody's expecting, or you get to hear about these things really, really early on, because they need to know what's going to happen. How are they going to calculate this? Will I get maternity pay, whatever it might be, or if somebody's parent has died, or, you know, so you really do get very emotionally invested.
Just want to bring Tom back in again, and sort of question for both of you this really, but first of all to you, Georgie, I'm going to talk about credit scores quickly. How many of your businesses do you feel like are aware of their credit score, or know the importance of the credit score? And then question to you, Tom, how important is your credit score as a business?
So I'll go for proportionately very, very low. We've got one or two clients who genuinely obsess over it. We've even had somebody who paid a consultant to advise them on how to bring the score up, and then paid somebody else to go to Dun & Bradstreet and negotiate with them to get the score up. Have you ever heard of that? So, you know, some of them really do obsess over it, but most, I would say, wouldn't even be aware that they have one.
Yeah, and to be fair, it is becoming a much more increasingly important aspect to a funding application. A lot more funders are bringing, well, the way they work are very much related to essentially kind of automated decisions, a lot more reliant on the tech rather than, let's say, the set of financial accounts and bank statements which are in front of them. And a big part of that is your business credit scoring. Obviously, so many variables go into this, from your time trading to your company's house data to how you repay your water bill and so on, and certain Experian and ECFAS and all these credit referencing agencies build up these big packages of data which funders do rely on to make decisions. So it is becoming an increasingly important thing to know about, to be made aware of. And we can, in some situations, we do see clients be declined due to their business credit score, and that is at the end of the day, if it is so low or so bad, then it is going to restrict them getting what they are after in terms of a funding solution. So we do have partners that can let clients know what their score is. And also ways in which they can improve that through that, which won't involve hopefully going to trying to negotiate. It's a good kind of side service that we also do out. But just to follow on to that, Sam, it is becoming a much more increasingly important aspect to a application for funding for sure.
Yeah, and not just for funding applications. So obviously we're going through a bit of an energy crisis at the moment. A lot of people don't realise that actually the credit score can affect the tariff that you'll be on. So when you're going to renew your energy contract, if you've got a low credit score, that's a sign that you might have low affordability. Therefore, you might be charged a lot more on your electrics. There's also a lot of energy suppliers are insisting on a security deposit up front, which can be as bad as, the worst I've seen is 25% of your annual cost up front, and which is just crippling for some businesses. I mean, you can imagine them in hospitality, for example. It's just never going to be affordable. But that security deposit is going to be larger if the credit score is poorer. So it really is worth getting on top of. And then if it does come to funding, it can be the fall at the first hurdle thing. If you're a very high risk credit score. And we do quite a lot of acquisition finance. So if you're a business and you're potentially looking to buy another business, if that other business has got a bad credit score that you're looking to buy, that can have an effect on the funding that you can get for that acquisition as well. So there's just so many different, it's very underrated, I think, in its importance. And it was a bit of a wake-up call when we did an SME survey in 2021. I think it was something like 80 or 90% of businesses didn't know their credit score and probably didn't even know what they were. So I think we're starting to move the grain. People are starting to realize how important it is, but I think there's still a long way to go. And yeah, Georgie, we're definitely happy to help you with getting the rest of your clients a bit more interested in it.
I think that's my takeaway for today. That sounds like an interesting conversation to add on.
Yes. All right, Joe, should we wrap up? We've got any closing comments or yeah.
Yeah, I mean, is there any, I know that Leo had a flurry of questions, but I don't know if anybody else has any further questions they wanted to ask us before we wrap everything up, or just give anyone a second if they want to.
I think if anyone wants to book in some time and see the platform itself, then go and book in a demo with Joe. If anyone just wants to catch up with me, I'm happy to do that as well.
Yeah, I think that'd be perfect. So thank you everyone for joining today, everyone that did. Thank you, Sam, for co-hosting with me, Tom for bringing his knowledge and insight and answering quite a few questions, and Geordie, thank you very much for joining as well and kind of sharing your story and journey with us. It's been really great to hear it. So yeah, I think that's going to be wrapping up. My name's Joe, and as Sam said, you can book in a call with me. We'll pop a link to my calendar and Sam's as well. So look forward to hearing from everybody soon.
Thanks, Georgie.
Thanks for having me.
See you later.
Cheers, guys.
Cheers, guys.
Thanks, Luke.
Thank you, Luke.